Hi, good evening, everyone. I'm Paul from Speed Home. Welcome to Speed Home RinggitHack Show. So tonight, right, we are going to share with you. We are very honored. We are invited a very professional, fund manager. Okay, Mr. Jerry. He will going to share with us where is the investment opportunity for the 2022. So no worry. We will start. Our event will start at 8:30 sharp. If you right now it's already on our Facebook or YouTube, please just stay tuned, and also please help us to share it out. Okay, our Facebook Live. So to have to let your friends and families that they also have share the same opportunity like you. They can also will know about grab the one of the practical useful tips. Okay, later. So guys, stay tuned. So right now I'm going to play a couple of Speed Home video. So after I play this, after the video finish, then we will start this event and on 8:30 sharp.
Hello, I am landlord. Hi, I am potential renter. And I am Speed Home. Wow, so cool. Editing only ma. Okay, so why should we use Speed Home? Why? Give me reason fast. I very busy. I got meeting with Dato later, Well, let's start with you first. Oh, okay. I'm interested to rent this guy's property. So can I take a look first? Oi. I where got time to go show my 10 properties to everyone. I only want to see one lah. Oh, sorry. Which one out of my 10 properties you want to see? No worries. We can arrange for our home runner to go to any of your 10 properties and take photos and videos and even arrange home viewings for any potential renters like you. Or free. Free. Oh, okay. Then if I like the property, can I rent straight away? Whoa, wait. I need to know his background first, After he no job cannot pay rent, how? Hey, you think I know money? Don't worry. We will do a complete background check to make sure the tenant is eligible and you get a qualified tenant. I don't mind. Check lah. But how is the deposit? Is it 2 months? Yeah, the deposit. This one very important. After he damaged my property and run away, how? Hey, you think all of us very bad, is it? You own 10 properties, then you know lah. Can you come closer a bit? I want to slap your face. Guys, there is no deposit. Huh? Wait, where can no deposit one? Simple. The tenant only needs to pass our zero deposit eligibility check and the landlord can sign up for the best insurance protection with Speed Home. Not bad no deposit. Wait, what insurance is this? It's Allianz Insurance that protects your right as a landlord. So just 1.5 months rental for the whole year, and Speed Home guarantees on-time rental payment, protection against rental loss, plus utility and household coverage. Oh, how much is the total coverage? Up to 42,000 ringgit. Wow, not bad. I can get money back. That means I can relax at home and you count him everything. Count him everything. Sign me up now. Me too. Great. Any other questions? Got free gift? We don't have any free gift. Can I give discount? Yeah, give free voucher lah. No free gift lah. But actually, you can advertise your property with us for free. And our insurance also have 60 days free cancellation. So no harm to try. Can I give free umbrella? In my life, I work very hard. I take good care of my family, I have very good friends, and I pay my taxes. My life is pretty good. Interrupt my narration. Must be about my rental property. Hello, Megan. Oh, Megan. Hey, how's my property? Tenant run away. Got property damage. 40,000 to repair. Why I didn't have protection for my rental property? Darling. I am pregnant. Are you sure? Why got 5 red lines one? That means really confirm pregnant. Why I didn't use protection? Hey, darling, you can't die yet. You don't have life insurance, Why I didn't buy more protection? It's okay, darling. Let's focus on the baby first. I hope it's a boy. You leh? I'm too old for this. Darling! No! No, my ATM! Become ghost already, And how come I'm wearing this shirt? I forgot to tell you about our sponsor today, Speed Home. So I know you already have insurance protection for your life, protection for your little brother, but why not have landlord insurance protection for your rentals with Speed Home? Get yourself covered when your tenants run away or when there's damage to your property. So make sure to check out Speed Home, okay? I go help my wife. Bye bye.
Hi, welcome everyone. Thank you for spending your time. Today's Friday, and then you guys still willing to attend today our Speak Home RinggitHack Show. So today what's the topic of the today that we're going to share with you guys? So today the topic that we are going to share is investment opportunity that you shouldn't miss in 2022. So our guest speaker, Mr. Jerry Lee Chee Yeong. He's FSMOne portfolio manager, and also have a first class honors in bachelor degree of finance. And in the meanwhile, he also is a chartered financial. He is also a chartered financial CFP. So yeah, so today he's going to share with us today the whole deal about what is the kind of the investments. So we knowing like in the just coming this years. Maybe it's like there's a lot of things that we're going to impact the market, such as the Omicron, the virus still hovering around, and also the U.S. federal interest rate is going to have an increase. So yada yada. So we have so many uncertainties and also changing. But in the meanwhile, in Chinese, that we say that when there is a crisis, then we have also have an opportunity there. So I also, without further ado, so don't want to waste anyone's time. So today, what we are going to, I'm going to invite Mr. Jerry Lee to start his sharing by today. So just give me a minute. I'm going to invite Mr. Jerry. Hi, Jerry.
Hi, Paul. Hi,
Yes.
good evening.
Just say
Can you
hi
hear
to
myself?
our audience also. Yeah.
Hello, everyone. Good evening, everyone. Yep.
Okay, guys, if you can hear our conversation very clear, can you just type 1 or type yes, so we will know now our audience, right? You guys is like really can listen us very clear. Yeah. Thank you. I saw some friends that they are typing. Thank you so much. So Jerry, thank you for first of all, thank you for willing to be our guest speakers for today evenings. So, and then today is Friday, and you're still willing to take up some of your time to help us to get us this topic, share with us this topic. What is the opportunities that we shouldn't miss in 2022? So right now I would like to pass the stage to you. Maybe you can just try it out about do you have a presentation slide?
Yeah, I have actually started to share my screen. Will you be able to see my share screen?
No problem. So everyone, if you can see the screen very clear, can you just type yes or type 1 so that we will know you can see the screen? Very clear? Yep. I think our audience is like they are typing right now. Okay. Thank you. So, okay. So I think, I checked the channel. Everything is clear. So, Jerry, maybe you can, Mr. Jerry, I think you can just, you can start the presentations.
All right. Thank you, Paul. Thank you so much. First of all, Good evening, everyone. Thank you for spending your time with us today. And also want to take this opportunity to thanks Paul and also Speed Home for inviting us to conduct today's sharing. And for today's session, I'm mainly going to share about the investment opportunity that we think most of the investors they shouldn't miss in the year of 2022. So before I start my sharing today, right, probably I'm going to take just about 5 minutes. So share with everyone. For some of you who probably is the first time of you hearing FSM1, allow me to take some time, just a 5 minutes, quick sharing on who we are and also what are we offering to all our clients. So just to share with everyone, FSM1, I'm actually from FSM1, and it was previously known as Fund Supermark. And if you look at FSM1, it's actually an online distribution arm of iFast Capital. So we are actually regulated and being governed by Security Commission, FIMM, Bank Negara, and also Bursa Malaysia. We actually a participating organization with Bursa Malaysia. Just happened early last year. We have just launched our stockbroking business, and investors right now they will be able to trade US stock, Hong Kong stock, or even Singapore and Malaysia stock with us. So just to share with everyone, over this side, just to share with everyone that we are actually regulated, and all our activities, the business activity that we conducted in Malaysia are actually regulated by all the regulators, the respective regulators, for example, the Security Commission and also Bank Negara Malaysia. So no worry that when you are investing with us, all your money are safeguarded. Yeah, so if I move on to the next slide here, also to share a little bit with everyone that now, if you look at FSM1 or previously known as Fund Supermark, right, we first started in the year of 2007 as a unit trust distributor and a platform that mainly distribute unit trust fund. But over the years, we realized that it's not sufficient to just have unit trust fund on our platform. So we slowly onboard a lot more products and getting more license with a Security Commission. So in the year of 2017, we launched our managed portfolio. So we first started off with a unit trust fund. And then in the year of 2017, we launched our OTC bond and also managed portfolio. So usually, traditionally, when investor want to buy OTC bond, mean all the over the counter bond, the individual bond paper, right? The minimum amount is actually 500,000, 1 million, or 5 million. But right now with FSM1, you will be able to buy into all those OTC bond, or we call it the retail bond or wholesale bond, as low as from 1,000 ringgit for retail bond and also 5,000 ringgit for wholesale bond. So we make it more affordable for most of the retail investors to access into all these kind of OTC bond. At the same time, we also offer the managed portfolio. Is the discretionary portfolio management service, which we help our investor to invest their money. Investor just need to pass their money to us and also do their risk profiling to find out that they belongs to which risk profile. From there, we will do all the asset allocation. We will help investor to decide where to invest and which are the funds that we need to buy into the investor portfolio. So it's more of a hassle-free investment solution for most of the investor. And I mentioned just now, it happened early last year. We launched our stockbroking business, which we offer stock and ETF to local investors. So for most of the local investors, I think if you want to buy into the local Bursa Malaysia stock and ETF, it's very accessible, using different brokers. But if you want to invest into the US stock, the Hong Kong stock or Singapore stock, sometimes if you want to use the local brokers, the brokerage fee will be slightly expensive. Some of them they might charge you 50 US dollar per trade, of 150 or 100 Hong Kong D per trade. So we understand that there's a gap in this segment, and we actually came in to offer our investor with a much lower brokerage fee to trade US stock, to trade Singapore stock, to trade Hong Kong stock. At the same time, you also will be able to access into local stock. If you look at in terms of fees wise, we're actually one of the lowest in town. So these are some of the products that we are offering. Of course, the last one will be insurance. You will be able to buy some of the life insurance policy and get your insurance policy as much lower cost. So if you look at our platform as a whole, the reason why we call ourselves FSM1 is actually one platform for all solution. So that's why these are all the solutions that we are actually currently offering to all our investors. And without much wasting our time, back to today, the main topic of today's sharing session, which is what are the investment opportunity that all the investors shouldn't miss in the year of 2022. So I'll actually just start this session by doing a recap for the year of 2021. So what happened in the global financial market in the year of 2021? If you look at the line here, it actually represent the market performance, the global equity market performance for the blue color line will be for the global equity market. This is the market that mainly the returns mainly contributed by the developed market, like for example US and Europe. And the other two lines in red and in yellow. In yellow will be the ASJ, the Asia ex Japan equity market, and for red color line will be the emerging markets equity. So these are the three major markets that we are tracking. And if you look at the line here, you clearly can see that there's a discrepancy between the performance between the global equity market, which is mainly from developed market, and also most of the Asia and emerging market. So what happened to the global equity market last year? Why for most of the developed market they can deliver such a fantastic return, but for most of the emerging and Asia Japan equity, their performance are rather disappointed. If you look at it, if you all still remember last year, early last year, if you look at country like US and also Europe, right? These are the country that they have a first mover advantage when it comes to the vaccination rates. Most of these country in the early, for example, first quarter and also beginning of second quarter, we're actually seeing 40-50% of the US and also Europe population being vaccinated. Whereas in most of the Asia and also emerging markets, the vaccination start to pick up, after the second quarters of last year. So that's why if you look at in terms of the economic environment, the developed markets like US and Europe, they are having less disruption compared to most of the Asian and emerging market. And the other thing we also can see clearly is that the way that the government handled this pandemic is very different in the developed market compared to most of the Asian country. So that's why these are the key factors that contributed to the difference in terms of performance between the developed market and also most of the emerging market. And the other thing also to highlight a little bit is that beside the COVID-19 hit, the other key factors that affected most of the Asian equity is that the China regulatory crackdown, which affected the overall investment sentiment. If some of you have invested into China equity or China, specifically China technology sector, you're aware that since the middle of last year, we see a lot of regulatory crackdown on some of these tech giants. New policy coming in, a lot of these tech giants being investigated and being fined by the Chinese government under the anti-monopoly law. Company like Didi, company like Meituan, your Alibaba, Tencent, and so on. So these are another key factors that affected most of the overall investment sentiment in Asian equity, especially for the China tech. If you look at it, China technology sector as a whole, they dropped close to 40% from the peak level in the year of 2021. And if you look at certain company like Alibaba actually dropped more than 50-60% from the peak level. So these are some of the key factors that have affected the overall financial market in the year of 2021. And what I've shared just now over the past 3 minutes is basically how's the market have performed in 2021. But what's more important to us at this point in time is that what are the opportunity? Where should I invest my money? Where should I put my money to work for me in the year of 2022? So if you look at next slide here, you'll be able to see these are some of the key investment things that we like to put up, they would to share with all the investors here. First one, I will actually go into details over the next couple of slides. So just to explain the headline titles here. First one, we expect 5 themes here. First one, we expect equities to outperform fixed income in the year of 2022. Meaning to say that we actually do advocate and encourage our investor to put more of their money into an equity market as compared to the fixed income market. Second one, we expect high inflation to continue over the next 2 years, and we think that the rate hike cycle is likely to start this year. In fact, I think yesterday, or the day before, 2 days ago, the U.S. Federal Reserve has also made a minutes that they think that the rate hike will be faster than expected. So these are the second investment theme. The third one will be China equities likely to bottom, and we think that China equity can be a contrarian bet in the year of 2022. Meaning to say that we do expect China equity to outperform this year. Fourth thing is also related to China. which is China digital economy, the China technology. We do expect a strong turnaround, a strong rebound in the China technology sector in the year of 2022 after going through a very, very bad year in the year of 2021. And fifth, also the last theme will be the Asian high yield space. So at this point in time, as a value investor, we do see very attractive value within the Asian high yield segment. So no, this is one of the space that we want to share with a lot of the investor and wish that no investors shouldn't miss out some of this investment opportunity. So I will go in details about the first theme, equities to outperform fixed income in the year of 2022. So these are some of the key reasons why we think equity market will outperform the fixed income market in the year of 2022. First is the rising vaccination rate. I think globally we're actually seeing rising vaccination rate, and although right now we have the new variant of Omicron, but a lot of the country have started their booster jab. And if you think about it, a lot of scientists also mentioned that this Omicron it is actually more contagious, but in terms of the severeness of the symptom and so on, it's actually less severe compared to the earlier variants, the Delta and so on. So a lot of the scientists also mentioned that it could be a chance that Omicron could be one of the factors that bring this pandemic to endemic. So this could be one of the key factors that could fasten the overall recovery in the global economy. And we always know that economy is always linked to equity market. Whenever we see the expectation that investors have towards the future outlook of the economy, if it's getting better and better, this will eventually be translated into the prices in the equity markets. And the second thing like I mentioned just now, when economy is performing, they're recovering and so on, we are able to see a strong recovery in corporate earnings. In fact, in the year of 2021, we have already witnessed a strong recovery in corporate earnings, and we do expect that this recovery will continue into 2022. And specifically, we do expect the earnings for Asian emerging market equity, particularly China equity, to rebound much stronger compared to the developed market in the year of 2022. Third thing is that we think if you put side by side equity and fixed income, we do think that the fixed income remain less attractive compared to the equities. This will actually be linked to the second point, second theme that I'm going to mention just now. So just a conclusion here is that we do think that equity is more attractive to fixed income from the valuation perspective and also from the upside potential perspective. That's why we actually advocate our investors to stay overweight in equities. In fact, for the portfolio that we have been managing for our clients, since September last year, we have actually started to increase our portfolio allocation more into the equity space by cutting our fixed income allocation. And on the table on your right hand side, right, you will probably be seeing that these are some of the markets that are under our coverage, and those markets that being rated very attractive. Mainly, they are the Asian and also emerging market equity. For example, we have Hong Kong equities. It have an upside potential of about 49% by the end of 2023. China equities also rated 4-star, and an upside potential of about 36% by the end of 2023. Asia, Japan, emerging markets, South Korea. These are the markets that being rated very attractive under our coverage. So as a whole, we do expect equities to continue to outperform fixed income in the year of 2022. Moving on to the next slide here to share a little bit on the second theme. The second theme here that I'm going to share is on the high inflation over the next couple of years. I think for some of the investors have been following closely in terms of the investment news and so on, you will be seeing that in the past 2 to 3 months ago, Fed have been mentioning that inflation is just a transitory factors. It won't last long. In fact, I think recently last month itself, Fed had actually give up to use the words of transitory. But if you think from the Fed perspective, right, they're actually not wrong of using the transitory, the wording of transitory. The key factors that why people will misunderstand the words of transitory is that they're actually looking from different perspective. Because if you think from the US Federal Reserve perspective, when they are setting policy, they're looking at economic outlook, they're actually looking at very long horizon. They're looking at 5 years, 10 years, 15 years. So for them, 1 to 2 years of a high inflation is actually a transitory period, looking at a 2 years of 15 years period. But from a normal investor, a layman like us, looking at the current inflation, we thought transitory is 2 months, 2 weeks, or even 2-3 months period. So it's actually a misunderstanding, and people are standing from different perspective to look at the words of transitory. But anyhow, like it or not, we do expect the inflation continue to stay high over the next couple of years, over the next 2 years period. We continue to see labor costs continue to increase, the cost of raw material continue to increase, and eventually company will pass on all this increase in terms of their cost of operating the business to the end consumer. So the end consumer will eventually feel the higher prices and also the inflation. So with that, we do expect the rate hike will start in the year of 2022. Earlier on, people are still expecting probably there will be just one rate hike in the year of 2022. And ever since the recent minutes from US Fed, people start to expect that probably there will be two or more hikes in the year of 2022. But regardless of how many hikes, we do expect that interest rate will continue to increase over the years, over the next 2-3 years period. So in a rising interest rate environment, investors should actually stay away from long duration fixed income asset. For example, your bond and so on. That's also one of the key factors that why we mention fixed income asset or bond is actually less attractive compared to the equity market. So that's a key reason why we continue to advocate our investor to stay invested and also stay overweight in equity as compared to the fixed income asset. And I move on to the third theme will be on China equity. So I think this year itself was last year itself, 2021 was a very bad year for China equity. Most of the China equity funds on our platform, they are barely break even, or some of them they are actually in negative territory, down by 5%, down by 8%. We believe that a lot of the investor, after witnessing a very strong year in 2020, a lot of the investors they went into China equity fund beginning of 2021 and they got hit, down by 5%, 10%. Last year was really a bad year for China equity. We also see a slowdown in terms of the overall economic growth in China. But we do think that the current slowdown in China economic growth has actually come to a level that the policy maker can no longer ignore. That's why over the past couple of weeks, we have been seeing a lot of the supportive policy being implemented by the Chinese government or the regulator, the policy makers. For example, PBOC has actually recently just delivered some of the supportive policy. Now, for example, they cut their triple R, they cut down some of their short-term financing rate, they are giving out some of the loans, some of the financing to the property sector. For some of them with a more healthier more healthy fundamentals. So these are some of the policy changes that we have been witnessing in China. I think the governments, the policy makers, the Chinese government, they are now be more aware of the recent slowdown in terms of the China growth. And I think moving forward in the year of 2022, we expect there will be more and more supportive, not only from the monetary policy perspective, but also supportive fiscal policy to be rolled out by the Chinese government. So that's why with all this supportive fiscal and also monetary policy, we are able to see a rebound in terms of overall economic growth, which will be subsequently translate into a much stronger earnings growth for the Chinese company. So this year itself, we do believe the Chinese equity market could be a contrarian bet for the year of 2022. And if we go deep in details on China equity markets, right, the other particular segment that we like is actually the China digital economy, which is the China technology segment. So I think I mentioned just now, since the beginning of last year, although Chinese equity market has been going through a very tough time in the year of 2021. But if you look into details, the China tech sector, a more specific sector, China tech sector, the performance is even worse compared to the broad market of China equity market. If you look at it, China tech, I mentioned just now, they down by close to 40% from the peak level. Some of the big names like Alibaba, Tencent, they down by more than 40%, 50%, or even 60%, some of their prices. So a lot of these companies been fine. by the government under the anti-monopoly law. So these are some of the things that happened over the years in the year of 2021. And at this point in time, we do believe that we are almost at the end of the tunnel. Although on a short-term perspective, over the next couple of weeks or months, we do expect certain volatility will still be there. But as a value investor, as a fundamental investor, we do aware the fact that market timing is really difficult. There's no way that we can time exactly where is the bottom of the market. But at the current with the current valuation and also the fundamentals of all these tech company, we do believe that at this point in time, we do offer a very attractive valuation, a very attractive opportunity for investor to take up some position within a China tech space. The other thing that I want to mention is that fundamentally for all these tech companies, right, it still remain very strong. The revenue for the tech company is still growing in the year of 2021. In fact, there's another space that we shouldn't ignore, which is the crowd segment. China have been spending a lot in terms of the crowd segment, and we do. I believe many of you here, not to just mention about China, but if you look at things that happen around us, digitalization have been happening for the past 1.5 years, and I don't think that even we are back to normal when everyone back to work and so on. When the COVID is no longer here, I do think that the trend of digitalization will not change. The way people spend, the way business being operated, it won't change within a short period of time. Or in fact, this will be the trend over the next 5 years, 10 years. Digitalization has been the trend, and with this digitalization, I think there's a lot more demand on crowd services. So if you look at company like Alibaba, their crowd segment have been growing significantly, have been growing very, very fast. Although if you look at the current situation, the crowd segment, the crowd revenue and earnings is just a small portion of their overall profit and revenue. But if you look beyond, look at a longer horizon, probably this could be one of the key driver for the company over the next 5-10 years. So that's why if you look at fundamental perspective, the China tech sector has a really strong fundamentals, but the price has came down so much from the top level, and we think that to a certain extent, the sell off is a little bit overblown. The other thing to think about it is that the recent regulatory crackdown, a lot of the investors will worry that are we going to see more and more policy being implemented to hit the tech giant? In fact, I think if you look at what happened and what being done by all these tech company, a lot of the tech giants, they are actually quite cooperative. We're actually seeing that a report saying that more than 68 companies, internet companies, that have completed their ratification as required by the new regulatory framework. So I think a lot of these companies, a lot of these tech giants, they also aware. If I want to operate, if I want to do business in China, I need to cooperate with the government. I cannot go against the government. So a lot of them, they do they do accept the fine, the penalty from the Chinese government. And if there's anything that they need to rectify, they actually fully rectify it and actually make sure that everything is compliance with the new regulatory framework. And the other thing that I think everyone of us shouldn't ignore is that 2022 is actually a politically important year for the CCP, the Chinese Communist Party. It's very important year for China, especially for presidency. Yes, because the Chinese Communist Party, they will host the 20th National Party Congress in November this year. So it's actually going to determine whether or not presidency will be able to continue to another presidential term. So I think this is also one of the factors. From our perspective, we do think that what happened last year is actually their action to clean up all the mess. Their action to clean up all the problems, all the issue in China itself, because they want to make sure that there is social and economic stability in China. And think about it, right? One way for a government to showcase to their people that I've actually managed the country, I've governed the country very well, is that I have economic stability. My economy is performing well. My stock market is performing well, because those are the report cards for the governments. So that's why we do think that in such a politically important year for China, the policymaker will actually prefer a more social and economic stability. And that's why we do think that this year itself, it could be one of the turnaround year for the China equity market, specifically the China technology companies. Another thing to wrap up this investment team, we do expect fundamentals continue to be there, fundamental continue to be strong. And second thing is that the commitment from the government to spur digitalization, and also the spending that being spent on cloud services and so on. So this could be one of the key driver that's going to continue to drive the strong growth within the digital economy, within the tech sector. And the other thing is that the easing of the regulatory pressure. We do think that right now we're actually towards the end of the tunnels, and probably we are going to see light at the end of the tunnels. That's why, I mentioned just now, just to recap another time, it's very difficult for us to time where will be the bottom. But at this current valuation and also with the strong fundamentals, we do think that the China tech sector is really something that investors shouldn't miss out. And based on our calculation, based on our analysis, we do think that with the current price and also using a fair PE of 30, based on their 2023 earnings, it actually will translate into an upside potential of more than 85% by the year of 2023. Meaning to say that we do expect, if things really go smoothly and markets do reflect the true fundamentals of this sector, we are able to see a 85% of our upside potential in the China tech sector by the end of 2023. Yeah. And if I move on to the last investment team, will be the Asian high yield sector. So this is one of the fixed income segment, and this is the only fixed income segment that we are going to share today. Just now I mentioned, the fixed income segment is less attractive compared to the equity segment. Or generally, we do favor in equity compared to fixed income. But there's one segment that we like and we see attractive valuation, which is the Asian high yield segment. I think for some of you who have been following very closely on Asian high yield or on the Chinese property sector, we will be hearing about Evergrande, Fantasia, and so on. These are the companies that are facing potential default, which affected the Asian high yield segment, because more than 50% of the Asian high yield, they are coming from the Chinese property counters, Chinese property sectors. So that's why it has actually affected the overall Asian high yield segment. So how do we analyze, or how do we look at Asian high yield? If you look at the graph at the top here, you're actually seeing the Asian high yields yield to maturity. Now you'll be actually seeing that the yield to maturity from Asian high yield, right, has actually come to a very attractive level. Right now here, you're actually showing the yield spread. The yield spread, basically it means that the additional yield that you're getting from the Asian high yield. But if you also look at the yield to maturity, how do we interpret yield to maturity? Basically, on a more layman term, it's not exactly the same, but on a more layman term, it's basically like, today I'm putting my money into FD, how much FD giving me? FD probably give me about 2% or 3%. But if I put my money into Asian high yield, assuming that there's no default over the next 1 year's period, I will be getting back about 10 to 13% of a yield to maturity. So the yield to maturity is somehow almost similar to the interest that we get from FD, but it's slightly different because there will be some other factors that will be affecting it. Well, for example, your default rate and so on. But on the more layman term, just to give you all a picture, is that the yield to maturity that we are saying here is somehow similar to the interest rate that we are saying for the FD, for the fixed deposit. So the yield to maturity for Asian high yield, if you look at on average, right, yield to maturity is actually around about 6 to 8% for Asian high yield on a normal time period. But right now, the yield to maturity has actually spiked to about 10 to 15% for the Asian high yield as a whole. So with this kind of a value, with this kind of attractive yield to maturity, and also that I mentioned just now, moving into 2022, we do expect the fundamentals, the overall economic environment to improve for Asian economy as a whole. So with this kind of improving fundamentals, improving economic situation, and a potential lower default rate, we do expect that the default rate will be going lower in the year of 2022. And with this kind of situation, the yield to maturity of 12 to 13% is really something very, very attractive to us at this point in time. So we really see value within the Asian high yield. And for investors who want to slightly diversify their exposure out from equity, if you are thinking that I'm having too much exposure in equity already, I want to buy some fixed income asset, I think Asian high yield could be one of the segment that you can consider, because right now at this point in time it's really really cheap and the valuation is really really attractive with a more attractive upside potential. So Asian high yield is also one of the segment for investors who consider to diversify some of the risk from equity market. This is a segment that you can consider. So just to do a recap of what I have shared just now, these are the few segments that the 5 key investment team that we think it could actually benefit of the investor, and these are five investment team that investors shouldn't miss out for the year of 2022. First one, we do expect equities to outperform fixed income this year because of the improving vaccination rate, because of the strong recovery in earning growth and also in economic growth. Yeah, so these are some of the key factors that lead us to come to the conclusions that equities could outperform fixed income in the year of 2022. And the second point, we do expect inflation to stay high over the next 2 years period, and interest rate is likely to go higher from now onwards. So that's why it makes the fixed income asset to be less attractive, and it further emphasize on our view that we should put more of our capital into the equity market compared to the fixed income market. Third thing, we know 2021 was a very bad year for the Chinese equity markets, and we do believe that China equity market likely to bottom now, and it could be a contrarian bet for investor in the year of 2022. Fourth thing, to be more specific within China equity, we have a very positive view on China technology sector, which is a China digital economy, and we expect China digital economy sector to have a strong turnaround and strong rebound in the year of 2022. Don't forget, 2022 will be a politically important year for the Chinese government. Fifth thing, for investors we are looking to diversify some of the risk from the equity market and you are considering some of the fixed income asset, Asian high yield could be one of the sector that you can consider, because right now they are offering attractive value. The valuation is currently very cheap, and if you look at the upside potential, it's really attractive at this point in time. So these are the 5 key investment team that we would like to share with everyone here. And just to share with you all, if you think that you share the same view with us and you want to look for which are the funds that I can invest, or which are the ETF that I can invest to buy into some of this exposure, to invest into to get some of this exposure. So if you go to our website and you go to the under the funds category, you go to the recommended funds. Over here, we have actually selected some of these funds for the respective category for our investor. So these are the funds that we have selected based on their historical performance, based on some of the quantitative and qualitative analysis that we have done over the years to pick the so-called some of the better funds within the category. Because if you look at on our platform, we have more than 500 unit trust funds. Sometimes it will be difficult for investors to screen to one by one. That's why we have actually shortened the list to categorize them into different regional exposure. So for example, investor are if you are sharing the same view with us, you like Asia Japan equity, or if you like China equity, you can actually go to each of these category to pick the fund choices that we have picked for our investor. These are the recommended funds category. And last part will be for some of the investor, if you think I really do not know how to pick a funds, I really do not know how to analyze a fund. When should I rebalance my portfolio? When should I do a pick different funds to my portfolio, do some of the changes to my portfolio? So this is one of the solutions that you can consider, which is the FSMOne managed portfolio. I mentioned just now, this is a portfolio that we have an portfolio management team to help you to manage your capital. We will help you to allocate your capital into different markets to help you to do asset allocation. Right now, we are actually overweighting China, we are overweighting equity market. So all these decision will be made by our investment team, our portfolio team. It will be active. Your portfolio will be actively managed by our team. So what you need to do is just to select a risk profile. Go through all the questionnaire, select a risk profile, and invest into the particular portfolio with the right risk profile that match your risk profile. So that's really a hazard-free investment solution for our investor, especially for some of the investors that you have your full-time job. You have no time to really monitor the market, to do all your portfolio rebalancing and so on. So these are the tasks that we will be perform on your behalf. Yeah. So I think with that, I come to the end of today's sharing session. If you all have any questions that you would like to know, you want to know more, you can log on to our website www.fsm1.com.my. Anything that you want to know more, you can contact us or you can send in email to our client help, clienthelp.my@fundsupermart.com. So I think with that, I come to the end of today's sharing session. No, I will be happy to take any questions if you have any question want to ask. Paul, I think you are muted, right?
Sorry. So, Jerry, before we start the Q&A sessions, right, I will take a 5 minutes to just do a very quick presentations about Speak Home. So everyone, but in the meanwhile, our audience, they can just type their questions on the comment side. Our Facebook audience and also our YouTube friends, our few YouTube audience friends, they also can type their questions in. Yeah. So So Jerry, maybe I will just take and then I will just remove your video
Yeah,
for your camera.
I will stop sharing.
Thank you. So guys, thank you so much. So I will just have a very quick because this is Speak Home. But in the meanwhile, you guys can start type the Q&A questions. So so I'm not sure how many of you that have been heard about Speak Home, but if you don't know what is Speak Home, it's very simple. Just as the video that I played just now, same as the video that I just played just now. We are the rental platform that allow the tenant and the landlord rent direct and the safest end-to-end platform. So if you as a landlord, you have a property, you can just upload your property, post your property advertisement in our website or app for free. So after if you find a potential tenant, they want to view your house, we will arrange a home runners to help you to show the house to the potential tenant. So in the meanwhile, after the tenant they view the house, they like your house, we will schedule. We will ask that the tenants to give us the certain of the documents. So to verify, to do a background check to make sure they are the good payment master. So after the tenant they pass our zero deposit checking, so we will run. We will set up a online tenancy agreement signing, and only we successfully help you to secure a tenant, then we will ask the landlord to buy any insurance to protect your house. If the tenants run away, didn't pay rents or the utilities, the insurance will cover your loss. So we also will offer the free rental collections. So in the market, if you want to find an agent to help you to collect the rental, every month they will charge to you by percentage. But in Speak Home, if you use Speak Home to find tenants, these services is free. So continue. So maybe you don't know, is Speak Home is a local company or a foreign company? Actually, Speak Home is a 100% Malaysia-made company. So we used to call ourselves Speak Rent, and we do our rebranding during 2019. So you will see that it's a certain numbers that we show in the screen. So we have more than 600 app downloads. Our monthly traffic also more than 220,000. And our properties that we listed on property is more than 100,000. And our tenant chat request means that the tenants that log into our website to search about the property is more than 600 create. So if you search Speak Home with all the mainstream media, type the name Speak Home, Star, Speak Home, Sina. So you will find basically my CEO is already accept all these kind of mainstream media's interview. So we have raised total 70 million over the past 5 years, and our investors which included IJM, Pitch In, MDV, Cradle, Gobi Partners, and also Allianz, our insurance partner, and our investors. So during our rebranding, we have invited the local governments and also Housing Minister YB Zuraida, the former Allianz CEO, and also the former IJM CEO. So what is so different than anyone else? Actually, Speak Home, right, compared to the other platforms, right, we do have a screen better quality tenants because we do some zero deposit checking the background, and we have allowed the tenant and the landlord direct communicate. And in the meanwhile, our zero deposit scheme that backed by Allianz Insurance, this is going to help the landlord rent out their house faster than the traditional way. So we'll also help the landlord to view their house if your house in a certain area in Klang Valley. And in the meanwhile, we also provide the free rental collections. So maybe some of the landlord, they feel like triggered. Why we want to do zero deposit? because that is a five key things that if you do with zero deposit, the first thing is we help you to maximize the tenant portfolio. And basically, there is no risk for you. We will screen the tenant, and if anything happens, the insurance will cover your loss. Your property will always be the first choice compared. Just imagine one building that have more than 100 units that is going to rent it out. Your house is going is rent with zero deposit, and another house is rent with two plus 0.5 months. Which one will rent out faster? And don't forget, like with the house that with zero deposit, your rental also get better. So we also have a faster rental process because everything is basically online, and we do provide 20 times better protections compared to the traditional deposit. So our home runners, they will collect your key, they will give you a call, they collect your key, and every day the keys will keep in the office after the viewing. So our tenant background check will ask for the tenant's IC, employment letter, 3 months bank statements, credit score, and we will use a credit scoring platform, Experian, to make sure the tenant didn't owe the bank or any kind of creditors. So foreigners, passport, visa, employment letter or university offer letter, and bank statement. So our tenancy agreement will all do online. We do provide the free rental collections. So when we talk about the insurance, right? Sorry, the wording may be a bit smaller. So the insurance is the price of the insurance is 1 month to 1.5 month rental. It depends which package that you choose. So if you go for our ultimate 1.5 months, we call it extended plus package, we have two things that we only Speed Home offer to the market. The first one is on time rental. If the tenants haven't paid you, if the tenant promised to pay you every first day of the month and they didn't pay, we will bank into the money. Then we will call the tenant and ask them to pay first, ask them to pay the rent. So the second thing we call it OCD, overstay defender, overstay cash defender. So this overstay cash defender, if the tenants they occupy your house, they didn't move out and they didn't pay rent, we'll help you to get a court order to evict the tenant. In the meanwhile, we'll pay the rent until the tenancy end, or we get the eviction letter to evict the tenant. So all the lawyer fee will be absorbed by Speed Home if you choose the extended plus package. So okay, so now is the claim process. So the claim process is not very complicated, just a police reports, receipts, and also the bills that you wish to claim. So if you only claim for the lost rental and also for the damaging, then we will proceed like to 3 to 7 working days. But if more than, if you that is very unlucky, you get the tenants that really bad, destroy a lot of your furniture, and you need to have a larger sum of the claim, then maybe it will take a month. So on the last of the two slides, I have two things I want to share with you guys. The first one is with Speed Home, we do build a free communities that welcome everyone to join. We call it Association of Landlord Malaysia. So this Association of Landlord Malaysia is like a free community that Speed Home built. So now this community, we have 5.5k members. Most of them, they have agent, lawyers, property investor, different types of variants of the members lah. So welcome everyone to join. You just type Association of Landlord Malaysia, or you just screenshot this and then you scan it. So in the meanwhile, we have Telegram channels that have 500 members. So just feel free to join if you don't want to miss a very interesting topic, such as just now Mr. Jerry that he's shared the tips of the opportunities, investment tips, properties, and also the others different topics. If you don't want to miss our webinar topics, you can feel free to join. Just feel free to join this Telegram channel. Thank you. So yeah, so I think right now our audience already start sharing the questions. So Jerry, just give me 1 second. I need to my colleagues helping me to gather all the questions in the Q&A slide. Just give me 1 second.
Sure, no problem.
Thank you. So yeah. Okay. So right now I'm going to look at the questions from our Facebook. So guys, okay. So the first questions are Mr. Jerry. There's someone they're asking what ETF is attractive now. So yeah, this is the first questions.
Yeah, I think according to what I've shared just now, we're actually looking positive on China, specifically the China tech. So one of the ETF that investor can buy is actually through the Hong Kong exchange, which is the Hang Seng Tech Index. Yeah, the name is actually called Hang Seng Tech Index. So this is technology, tech stand for technology. So Hang Seng Tech Index. So this is an index that they capture the overall China technology exposure. Yeah, so they
Okay.
give exposure to China tech names.
Okay, so you
Yeah,
are
so
quite bullish, according to the sharing that you just shared just now, right? I just want to
mm,
comment a bit and also that discuss. So that you mentioned about the China's, right? Everything, the negative thing already factored in. So is it that is any like what we call that black swan or the gray rhino that we're gonna happens? Do you have any kind of this kind of the ideas on this?
yeah, of course, black swan is something that is unexpected. That's why we call it black swan. But of course, in our mind, I think when come to investing into China, right,
Yes.
the policy risk is definitely one thing that we are aware of it. No matter when and where you are investing in China, I think this
Mhm.
is one of the key risks that you shouldn't ignore, and that has actually the key risk that had hit most of the investor very badly in the year of 2021. But at this point in time, I mentioned just now, given that most of the growth environment have slowed to a level that we think that the policy maker shouldn't ignore at this point in time, or they couldn't ignore anymore at this point in time. We think that we are going to see more and more supportive policy coming up from them. So that's why, as a whole, overall, we do believe that Chinese equity markets could perform well in this year itself. Yeah.
Okay, so that is the second questions, right? That is
Mm.
audience that he asked. Is it that is a logistic industry, right? Because we saw he saw some restructures in the logistic industry. So is it that that is opportunities also in the logistic industry?
Yeah, I think the opportunity has actually happened few months back in terms of
Okay.
logistics. We have been seeing and it's actually also thanks to the COVID-19 hit and
Hmm.
also the digitalization trend. People have been buying a lot more stuff. Me and you, we have been buying more stuff from your Taobao, Lazada, and so on.
Yeah.
Yeah, so this has actually benefited the overall logistics industry. And if you look at in terms of prices wise, the logistic if you look at it from the company perspective, the fees, the transportation logistic fees have increased so much over the past 1.5 years period.
Mm-hmm.
So at this point in time, a lot of this company, they are actually still enjoying a very strong earning on from the logistic perspective. But like it or not, towards the next couple of quarters, we're likely to see the fees will start to moderate and come to a more reasonable level.
Just a
But at
bit
this point
like
in time,
the glove industry lah.
it won't be as bad as the glove industry lah, because glove industry as a whole, the barrier of entry is much lower. That's why
Yeah.
we see more and more players coming in, increasing the
Agree.
supply and
Agree.
so on. Yeah, but for logistics, is slightly difficult lah. Especially if you're looking at cross border logistics and so on. So those barrier of entry is slightly higher.
Hmm.
Yeah.
Okay, so come back to the inflation's topic that you just now you share.
Mm.
So the hike cycle like maybe is more than like around 2 to 3. So definitely this is going to impact the US stock markets lah, the fund flow, everything. So manuals, right? Do we like it going to impact the active ETF, like the active ETF? Should we pick the active the kind of the ETF or the passive type of the ETF?
Okay, a very good questions. Yeah, because if you look at when come to this kind of recovery environment where you need to be very selective, because during a recovery, okay, at the beginning of the recovery phase, right, you can actually go for passive. There's no harm of you going after passive, because during the beginning of the recovery phase, everything will go up, no matter what
Hmm.
the price will go up. But if
Hmm.
you are entering into the second or third or into a more matured expansion phase, right, you need to be slightly more selective. Some counters, they could be benefited from the rising interest rate environment. They could be benefited from certain teams, but certain counters, they might not. Could be hurt by rising interest rate environment. A very good example, for example, if you look at most of the REITs, we call it real estate investment trust. Most of the REITs, they will be hurt during a rising interest rate environment. But oppositely, banking sector will be benefited. So some people will always argue that when interest rate go up, it seems to be bad for equity market. No, that's not the case. You need to be when interest rate go up, it not necessarily be bad to all equities market. There are certain sector that will be benefited. So you need to be more selective. There's also a reason why we think in certain point of time investors actually need to go on those actively managed fund or actively managed ETF.
Yes.
Those
Mm,
ETF or those fund will be able to contribute more value, although it's slightly expensive in terms of the
mm,
fees and so on. But
mm.
if you pay a 1 or 2% higher fees, but you get additional 5 to 10% return, why not? Yeah. So at the end of the day, it's really to gauge from a performance perspective.
Okay, so we have a friend called Lee Mei Lee. So Mei Lee, she's asking is about how about Malaysia ETF?
Malaysia, we really have limited ETF. Yeah,
Very
I mean,
less.
yeah, very limited, and yeah, in the Malaysia space, most of the ETF they're actually feeding into your Malaysia KLCI, your US the Dow Jones, and
Yeah.
also your China A50. So those are basically the index for the respective country lah. My
Yes.
recommendation to you is that if you really want to buy into China, for example, if you buy into China A50, you might as well buy into a China actively managed China equity fund. No, because over a long period of time, we have been witnessing a lot of scenario. The China actively managed China equity fund always outperform the A50 index. So there's no point of you buying into some of these ETF. But if you look at in terms of ETF wise, we do encourage investors to look into some of the ETF in US stock exchange and also in the Hong Kong stock exchange, because from there you will be able to get a more exciting exposure. For example, you can get a pure banking sector ETF. You can get a pure global payment ETF. Those if you are really, if you look at it, the overall payment pattern globally have changed. Previously, we always use cash, but nowadays people tend to use wallet. They tend to use your Visa card, PayWave, and so on. So if you think that all this global payment will be benefited from this trend, right? You can buy into the global payment ETF. So those are the more attractive and also more exciting name that we are seeing from the US and also Hong Kong Stock Exchange. So if investors really want to explore more ETF, they actually come to our platform and look for the US and also Hong Kong ETF.
Noted, noted. So Mr.
Yeah.
Jerry, can you also share with us, right? If I want to pick uh I want to pick a fixed incomes investments, right? What is the three key things that I should know before I really invest?
Okay. So basically, I think the question is actually asking about fixed income fund. I assume
Correct.
it's a fixed income
Sorry,
fund.
it's fixed income fund, of course. Yeah,
Okay,
fixed income
yeah,
fund.
okay. So there's a few, I think not only three, there's a lot more factors that we need to consider. When we pick a fixed
Correct.
income fund, first thing first, you need to know the fund size. For fixed
Mm,
income funds, right, the fund size is very important because on a fund manager level, when they buy into certain fixed income paper, right, we call it the
yes.
OTC bond.
Mm,
The minimum, we call it the standard lot. The standard
mm,
lot is usually on 1 million or 5 million. So
mm,
if the fund size is very small, the the exposure might not be as diversified compared to a funds with a bigger fund size. So fund size is
okay.
something very important when you pick a fixed income fund. Subsequently, you also need to go into their duration, the
Mm,
average duration for this fund. Like I mentioned just now, right now, if we are on a rising interest rate environment, I
mm,
would expect I will actually buy into a fund with a much lower duration, a much
mm,
shorter duration, because short duration fund they perform much better during a rising interest rate environment as compared to long duration bond fund. Third thing is actually the yield to maturity. Like I mentioned just now, yield to maturity is something. It's not exactly, but it's something like the interest that we are getting from FD lah. Usually
mm.
people compare like this, but it's not exactly the same thing. There will be something that is causing the difference, some factors that will cause a difference, but technically it is something similar to the interest that we are getting for FD. So due to maturity is something also very important. They tell you that this fund manager, whether or not they are buying more into the investment grade or they are buying more into the junk bond. Junk bond means those with a very low rate, but probably they pay you a very high coupon, very high yield, and so on. So this, if you want to me to list the top three things, these will be the three things. First, fund size. Second, the duration. Third thing is that the overall average yield to maturity of the funds.
Okay.
Yeah.
So actually, this is one question from me lah. Just now
Mm,
you mentioned, right, the China's tech sector the regulatory risk, or actually it's like almost pass over, but seems like this is something like still like very uncertain. So if I let's say, right, if I have some money, So what is the amount, like, sorry, what is the percentage, like if I want to be like to be I'm a not very high risk, moderate. So if I have, let's say that I have $100, so how much is that should I allocate it in this China
Tech, yeah, okay.
yeah, tech
Of course,
sector?
yeah, when it comes to asset allocation is something very important.
Correct.
Although we think that we say that we like China tech, we are very positive in China tech, but there's also a part that you need to do it very well is that how to allocate your capital. So
Correct.
always when we advocate or we give advice to our clients, we always tell them that to this kind of very high risk and volatile sector,
Yes.
because it's a specific China technology sector, it's very specific to one sector, the risk is definitely much higher. So for this kind of we call it the tactical or supplementary portion. We always
Mm,
advise our clients that not putting more than 20% of your total capital into this kind of segment.
mm,
Let's
mm,
say
mm,
if you have $1,000 to invest, not putting more than 200 into this sector.
mm.
If you want to do proper diversification for your portfolio.
I see. This is a very useful tips, Mr. Jerry, because sometimes, right, when some of people they complain they lost money or something because they didn't do their risk management good enough, or they are didn't like they are too risky. Yeah, they didn't like to review their own risk appetite or something.
Yeah, this is
So
something I think this is really something very important because when it comes to investment, right, sometimes it's not about how do have you analyzed the market. It
correct.
actually also depend that how much of a risk that you are taking for yourself, and are you taking unnecessary risk? Are you taking excessive risk? Because sometimes if you analyze something, you probably analyze it very well, but
Mm,
you need to know that when it comes to investment, there's a lot of uncertainty, and things markets might not reflect the true value within a short period of time. There will be some noises and so on that will affect the prices. But if you are taking excessive risk, what happens is that if the market go against you, you will probably be hit and you probably be panicked. To a certain point in time, you probably sell all your holdings. Probably you have made a very good analysis, you make the right call. It's just
mm,
that the timing is not right. Certain things
correct.
happen that hit your investment, but you are taking excessive risk, so you are panicked, and that's caused you to sell all your investment holdings. So that's why when it comes to investment, one thing very important is that we always advise our client to properly look at your risk profile and
Mm,
invest according to your risk profile. Don't
mm.
take excessive risk.
So if I want to sign up FMS1 from SMS1, right, I will get this kind of the assessment, right? You guys will
Yeah, yeah,
advise.
yeah. Yes, we actually have a list of questionnaire, risk profiling questionnaire
Mm,
for investor to fill up. So from there, you will be able to know which risk category you are belongs to.
sounds great. So guys, what you're waiting for? Just type FMS1, Google it. Later I will share the link of FMS1 in the comment sections. So you guys can just just click on the link. So in the meanwhile, Mr. Jerry, I believe, right, you in the 22 January's, right, you guys have a very exciting event. It's going to happen, right?
Yep. We have our
So
what and where to invest. I think it's our one of our flagship event that
mm,
we organize every year.
mm. So and also during the event, you guys also will have a very exciting a lot of the lucky draw, more than
Mm,
10,000 ringgit. Am I right?
yep, yep. So
So
from the event, I think the audience or the investor will be able to hear from more experts. We actually invited a lot of the top fund managers from the
mm,
industry to conduct a sharing to all our investors. And
mm,
during the session, we also having some lucky draws like you mentioned just now. Actually, more than 10,000 of our prizes that to be win by the audience.
I see. So guys, I already shared the link about the what, where and what to invest link FMS1. Yep. So later you guys can just click on the link and you can sign up from there. Okay. So just give me a minute. So yeah. So I think today's we almost it's already 9:30. It's almost end of our event. So Mr. Jerry, do you have any things that you want to just highlight, or last recall for your presentation just now? Yeah.
Maybe one last piece of advice is that when it comes to investment, really advise most of the investor to really like we mentioned just now, do a proper assessment of your risk profile. Don't take excessive risk. Although market seems to be better moving forward, Asian equity, China equity seems to be better, but I think proper diversification is still necessary. It's better for us to adopt a portfolio approach when it comes to investment.
I see. So guys, so don't forget. Okay, today after this event, you just don't just listen. You must take some actions. We already share the link, of the FMS website and also the event. So if you want to learn more, you want to get more insight where to and don't you just join FMS one where and what and where to invest event, and you will stand a chance to win. They are going to give out more than 10K gift. So so just click on the link and sign up. Yeah. Thank you, Mr. Jerry. Thank you for your time, and also really the just now the 5 points that you share, and also the last things that you mentioned just now. You must always do an assessment of your own risk profile, so that like you won't get panic when there's something is not like falling go to the way that you think. Yep. Thank you so much, Jerry, and
No
hope
problem.
you
Thank you
have a
for
good rest later. Thank you so much.
yeah. Same to
Good night,
you.
everyone.
Thank you.
Bye
See
bye.
you. Bye bye.